Hey guys, Mike here with Red Book Quants. So I just recorded this really in-depth 15-minute market analysis for you guys. And then I realized at the end that I hadn't plugged in my microphone. So here we go again. And it gives me an opportunity to kind of focus my mind. And maybe this one is only going to be 5 minutes for that reason. So yeah, that's how I see it anyway. All right, so obviously it's been interesting over the last few days in regards to the price action, right? We've been working our way up a little bit since this spike low here. And I reported on that, I think, a week back. And it's worked its way up and it looked all positive. But one thing I discussed with my altcoin mastermind over the weekend was that, and we all agreed, was that this price action had no meat behind it, right? It was very lackluster. Very lackluster, actually. And low volatility. Really not much going on here, right? It seemed like a real feeble bounce back, and sometimes that can work out. Sometimes it's consistent tepid selling that kind of then develops into something, but the opposite happened, and now it dropped down again, and we're back to the old range, 36,000 or something, 37,000, 36,000. We've seen this now for quite a while, right? And yeah, it's getting annoying, but it is what it is. And now, the point I wanted to make was that sometimes you have to just kind of take a step back, because there's a lot of people apply a lot of wishful thinking and fishing for clues, right? Especially when the market turns down psychologically, it's taxing for us. So we are desperately looking for clues as to when the pain will stop. Because when the market goes up, right, during those times, well, maybe here you were worried a bit, but as long as it keeps crawling up, you're not checking account 10 times a day, right? No, you're just enjoying the ride and say, hey, I'm a rock star, right? The market's going up, I'm in the right instrument, I'm doing well, cha-ching. And market turns, and all of a sudden the psychology turns from greed to fear. We all know that. I'm telling you anything new. And then you start looking for clues, you fish for any, you grasp for any straws, right, that might help you not only understand what's going on, but maybe give you hope that soon the pain will be over. And I usually try to train my viewers and subscribers to untrain that, because it's an inherent psychological disposition that we all have as human beings, not just you or Steve over there, or Mary or whatever, or Michael. we all have that, right? We all have this disposition to a certain extent. We're all human beings. And so we all suffer from the same cognitive biases. And I want to spare you a long drawn-out explanation as, all the ins and outs involved in human psychology, obviously, when it comes to trading. But let me just summarize it in a way by saying that human beings are really not wired to be traders. We are not. We're kind of orthogonal, right, to where we should be psychologically. We apply a lot of emotions, wishful thinking. We make the worst decisions during the best times, actually. Best times being when we should take complete opposite action. We take action that is really many times counterproductive to our long-term goals, right? I mean, how often have you looked at the market, right, at a chart and said, hey, man, I wish I would have bought down here. But did you? Well, case in point, right? So let's just look at this chart and forget about you having an exposure or me having an exposure to this market. Because if you watch this video, you're probably on Bitcoin or some kind of crypto right now, right? So clearly this is pointing down. And at the danger of sounding like a broken record, I've said this, since about here, right? Back in early December, I've said that we're building a series of lower lows and lower highs. I've been saying that over and over again. And until that changes, we're going to keep doing that. I mean, that's a perfectly simple statement, right? Now, there's some positives here, because when we were down here, what I said was, okay, well, at this point, the next straw to really draw us higher, right? The next inflection point that would help us kind of establish that this may be a floor pattern, a floor formation, is up here, right? 44,600 on Bitcoin USD. And or maybe this one. I'd really say this one here, 44,600. And that was quite a ways away, because at that point we're trading like at 34,000. So, whoa, you know, quite a few points to make up for, right? Over 10,000 points. Well, actually about yeah, like down here from the lows, around 10,000 handles. So quite a bit, right? Quite a bit of price action. So we worked our way up to almost, I think we actually touched 39,000, and then it dropped again. Well, sometimes bearish action is good. Is actually in kind of it has a bullish implication in that if it gets breached, this, because we have built a new spiker here now, clearly, right? We might actually drop a little bit deeper, which might actually be good. If we reverse it and breach, that might actually serve as acceleration higher, and then we breach this one. Make sense? I hope this is clear, because this is a very important point, because it's all about perception in the market. You know, numbers is one thing, but, you know, we all look at charts. People look at charts today. You know, everyone has a charting platform. It's not like ticker tape days anymore, right? Ticker tapes, people were wired differently back then, because we looked, you know, they looked at, not we, I wasn't there, but, you know, grandpa or great grandpa actually looked at ticker tapes or looked at the board. If you were a floor trader, you looked at the board and you saw the numbers change. And so you didn't really think of charts like this, or candle charts, whatever you're using, right? Even a line chart. Some people were drawing them. Some people were drawing point and finger charts, you know, PNF charts, but point and figure charts, pardon me. And, you know, however you want to look at the market, but this is kind of like, this is what everyone is looking at right now. Hundreds of millions of people are looking at the same price action every day here. See that? So they're all looking at the same thresholds, and whether not consciously or subconsciously, whether or not they're technicians or whether they're not technicians, they all see, like, if these formations here, these highs, when they're breached, it paints a different picture, right? Because if you are, let me demonstrate, right? The psychology here is very different than here, right? See, there's the first sort of breach, and then see that, and once you're there, the whole picture changes here, because you basically recognize that this might be a floor formation, because you have made progress, you overcome what is now considered resistance, right? Because why is it resistance? Well, it bounced against it before, right? It kind of bumped its head and fell back down, and then it succeeds where it previously failed, and that's what it's all about. It's an inflection point to succeed where you previously failed, right? If you, like in any discipline, you accomplish something that you previously failed on, you are making a step higher, right? You're advancing. Same with price action. I don't know if that's a good analogy, but take it for what it is. So, so to summarize, right? I don't see any really major change here at this point yet. We haven't reached any thresholds that would alter the hypothesis. And I see a lot of people, and I don't want to name names, that keep throwing out these, oh yeah, this is the low, this is the low, this is the low, this is the bottom, right? Because of reasons. And it's just harebrained. And I've been there, but unlike many people in the space right now who are reporting on price action, I've been there for over 20 years. I've looked at charts, hundreds of thousands of charts over the years. No exaggeration. Futures, Forex and stocks, equities, of course, bonds, everything. I've covered the gamut. I've got thousands of posts on Evil Speculator, and and I've brought a lot over to Repliquants. And so I've looked at so much price action that I've kind of, it's like, some people play the piano, I don't think about it anymore. That doesn't mean that I know a lot more than you guys, but my trick is that I know what to ignore and not what to fall prey to. So, with that said, right, I saw things discussed. Well, the whales are still accumulating, which is a positive sign, right? Because that happens actually quite aggressively here. It seems. There was accumulation here all the way. There was some selling here, then accumulation here, and see, during this current correction, there was some selling. I think there was some profit taking because it happened very quickly. See that? It was not like slowly, but like boom, right? Profit taking right up here. See that? Somebody knew something, right? And maybe we should look at this more often now. and since about here, there's constant price averaging, which we've seen in the media as well. We see, MicroStrategy. What's his name? Michael. Just escapes me right now. But MicroStrategy has been accumulating a ton of positions over the last few weeks, and I think this is continuing. Right? This is continuing this trend here. I've seen, I've heard about like the funding rate. So, people discussing that right now. Perpetual futures funding rate, right? And yeah, look, it takes a second here. So yeah, this chart right here, quite interesting. Let's have it set to 1 hour. Like, oh God, I do this every time. Okay, it's gonna get all screwed up now. Sorry about that. I hate this. Sorry about that. Okay, so I'm just used to different type of charts. So if you zoom in here, right, and let's imagine you were, let's say here, right? Scroll over a little bit more. No, let me make it smaller. There you go. Even smaller. Okay. I don't know what I'm doing. Right? I'm just trying to find exactly here. Right. There you go. So, but I mean, you could say, okay, we're here, and it's just kind of, we see, okay, here's where you see some very, very concerted, right? Leverage traders are going short, right? And it's really, you pay a premium now to be short, and that's kind of like normally a sign that we might see a flow in place, right? But see how long it pertains. Look, sustains. It sustains for quite a while. See that? And here too. See, and then it looks, oh yeah, we're back. It happens again. So these conditions can sustain themselves for quite a while. See, there, quite a while. This was this whole correction last year. Is this last year? It was 2020, 21, yeah. See, that's what we went through last year. So when I see what's going on right here, there's nothing yet, Yeah, this could go on for quite a while. So there's no clues here. And I could show you dozens of these charts, but I'm not going to. I mean, we've got tons of stuff here in Glassnode, and I've looked at them all the time. And if there was anything that really was conclusive, I would share it with you, believe me. So bottom line is this, guys. Look, bottom line is that we could easily work our way down to 30,000. I've said this for weeks now, and believe me when I tell you. So this might actually be a very good buying opportunity because, again, this is not last year's market, or this is not 2020 market either. We've gone from, right, I think 2020 was $380 billion. Then we went to over 2 trillion last year, late last year, and now I think it's 1.8 or something like that. So some value has been shaved off the crypto market, but this is not the same market, not the same players. We got a bunch of ETFs now, futures, options, whatever. It's one thing to cost average down and accumulate, right? The whales are definitely accumulating. It's another one to let this market fall off the plate, right? So it's a game you have to play very, very cautiously. And they're playing it very cautiously. So clearly, right? And what I'm seeing is momentum is kind of slowing down, which is a positive sign. But see, we're not even going, and that's why kind of crucial as well. See how we're kind of pushing sideways here. We haven't seen that yet. We're still, again, lower lows, lower highs, and the trajectory has not changed. We need to see this flatten out here, this curve, this shorter term curve. We need to see this flatten out. And how can this flatten out? Only if you build price action like this. If we're starting to push sideways for longer periods of time. That gives us the potential. Then we need to see a breach like that, like this one here, see? Oh, well, this one failed, fine. And here it even scared the children a little bit, but then it recovered. So that is very bullish actually when that happens, see that? And it happens the second time, and then here a third time even. And at that point, the odds are very high, especially when you might not catch all this. You might not catch, what was that, 30,000? You might have to grab it at 36,000, but see what happened afterwards, right? So that's how you got to think. This has to happen first. This is nothing yet. It's not. And we need to see more price action here that's actually bullish. It's so silly that this is by all intents and purposes still bearish price action. And until that changes, that we actually see bullish price action, this is more sideways price action. And we haven't even seen any bullish yet. So, okay, let's revise that statement. We have to actually have to see some sideways statements, sideways price action first. And once that happens, well, then we're, ready to go. We're ready for actually some bullish price action. We're setting basically when you build a house, right, you have to build the basement first, right? We have to build the foundation first. And if you don't have a foundation, well, the whole thing is going to fall, in on itself. So actually very similar with when it comes to markets. You need a foundation to build upon where you can jumping boards, right? We don't have that yet. This is still, I'm not going to say it again. You've heard it many times now, right? You know what I'm talking about. And until we're breaching here somewhere, this one here first and this one here. So bottom line is, I still believe 30,000 will be protected violently, aggressively. In the interim, we're going to either work our way down or it's going to start flattening out. And then we have to first breach 39,000 and almost 40,000. Okay, let's say 40,000 has to go. It's psychologically important, that threshold. 40,000 has to be breached. And after that, 42,600. And if we go there, if we get there, then we have something to work with. Until then, pure speculation. Just ignore everything here. Outside of that, just believe your own lying eyes. Okay, as I said, because it's right in front of you. If you look at the entire market as a whole, total, right, that's including Bitcoin. So same game here. Right? Total 2, which is without Bitcoin, a little bit more bullish. Right? Altcoins have actually, that's also the weird thing about this current market, this current correction, that altcoins actually have held, some altcoins at least, have held up quite strongly in comparison. So similar formation, a little bit stronger. Let's look at Ethereum real quick. First against USD and then against Bitcoin. So same thing. We're seeing the identical picture everywhere. And let's look at Ethereum versus Bitcoin. So let me move my mug up here. So there. Oh, Ethereum is actually picking up, huh? Interesting. Which means if this maintains, we might actually switch to Ethereum mode soon. Yeah, in Cryptonaissance, I mean, in our trading system. But see, this is still pointing down as well here. So, but this is actually quite a nice advance. I'm surprised to see that. See though, right? I mean, if you look in the long-term chart, right, that's where we are. I mean, it's at least in terms of Ethereum, Bitcoin, right? We're well in the range. So, in retrospect, and I wouldn't try to bring this into our system, but I must point out that do I have the drawing tool? Here we go. So I must point out that this might actually not be a bad threshold moving forward to kind of switch from Bitcoin to Ethereum once Ethereum, the cross reaches this threshold here. It has built itself up a nice support line here. So, could be interesting, just as a side note. But okay, so that's all I got for today. I hope this is helpful. I just want to provide that so that it kind of is an antidote to a lot of the BS you might be hearing. And I'm trying to be dismissive of everyone else's opinion or anything like this. Don't get me wrong. I'm just trying to give it to you as hardcore and as truthfully as possible without, because I like to really keep it real, because that helps you the most. Right? Giving you unnecessary, throwing little clues at you that look bullish and get hyped up to no end and might make you feel better. Not going to help you though. So my job is to keep it real, and my job is to, just the facts, ma'am, right? That's the old show goes. So as the old expression goes. And that's really the most important thing, right? When it comes to market analysis, be objective, be truthful. Don't talk your book, and prepare yourself psychologically, because it's all about psychology when it comes to trading. Looking at charts and all that, and the trading and the technical aspects of trading, you learn that fairly easy. How do people fail? Right here. And that's why I'm trying to keep you on the narrow, on the straight and narrow, and really prepare you and give it to you absolutely, straight and objectively, as objective as I can be. Right? I'm a human being like you. Okay. So I hope this helps, and so when you hear all these clues and things, you're being probably, I'm sure I'm not the only person you're listening to. You might get a lot of hype and maybe also FUD. Being a lot of people are super bearish right now, which is a good sign. That helps actually if you read it the proper way. But yeah, I hope it helps you kind of shield yourself against a lot of the hyperbole and misanalysis, I would phrase it, right, from people who might not be as experienced, people who are never really traded for a living, people who just basically maybe like that meme I found, like trust me, I've been trading crypto since last October, right? That kind of stuff. So I give it to you straight and just run with it. Otherwise, there's really not much to report. We have to let the price action speak. Price is the ultimate denominator. And until there's anything new to report, there's really not much else to be said. So I'll leave you with that. It's already longer than I wanted. So that's it. I catch you next time.